and gentlemen, welcome back to the channel. I hope you're excited for what is to come. In this video, we will share your largest breaking news over this weekend. Honestly, there's not much of it. It's kind of a quiet weekend. But what we really need to talk about here in this video, the core of this video, is the change that we just seen from the Fed. People are going to look back at this in 2 to 3 years and say, this was the equivalent of the 2022 Jackson Hole, but the bullish version. Okay, now what that means is 2022's Jackson Hole was like, damn, that was the decisive flip from the Fed, where they were kind of, leaving the door open to different possibilities and decisively said, oh yeah, we could have a recession. We're going to conquer inflation no matter the cost. It was like the Volcker moment. Okay. Today, or again, Friday, was the bullish version of that. Okay. And this sets us up for massive gains into the end of this year, 2026 and beyond. And we're going to talk about exactly why that is, my expectations. And honestly, I'm going to say right now, the best place to position is AI. Hands down. AI is like the internet, okay? If you were not of investing age or not investing during the dawn of the internet, and you want the opportunity to capitalize on the next big round of, $1 trillion plus companies, today is your moment, okay? Today is your moment to build your wealth. You're never going to have another opportunity in your lifetime like AI. You never will. Let me just spoil the beans for people, okay? You're never going to have another opportunity like AI. If you are not fully leaned into AI right now, that's crazy to me, okay? AI is going to have different moments. It's going to be healthcare one day. It's going to be figuratively speaking, it's going to be robotics another day. It's going to be software this day and energy this day and whatever. But AI is the biggest revolution to happen in your lifetime. Okay. Now, if you want to come take advantage of that alongside us, we are investing in small cap AI stocks. Okay. With the idea of finding those small cap stocks before they explode. I invested in IONQ at $7, quantum computing company. It's like $50 today. Okay. I invested in Novartis Semiconductor at like $2. It's like $9 today. Invested in Nebius at $20. It's like $65 today. Invested in Applied Digital at $3. Today it's like $15. Okay. Portfolio is up about 70.5% year to date. And I really think the end of this year, it's going to get even more dramatic. Now, with this strategy of finding the high quality AI companies that are trading at a fraction of the multiple of other companies, I think you can lower the overall risk profile. Okay. And a good rule of thumb for this strategy is if everyone knows about the company, the opportunity is probably gone. SoundHound, BBAI, some of these companies that are widely known at this point, the opportunity is largely gone. Even NVIDIA, like, could you do well in NVIDIA? Sure. Is NVIDIA going to 10x anytime soon? No, because everyone knows about it. Literally, the opportunity is gone when people know about something. Okay, so you want to be first. You want to be first, and that is what we are doing. We're outperforming 98% of hedge funds and institutions, even as the last couple of weeks have been rough. This portfolio on July 23rd was up 95% year to date. I think we're going to beat that into the end of this year. But hey, I'm not a financial advisor. It's not a recommendation. You could lose all of your money. And I think the biggest risk to that strategy for anyone that does join is if you don't understand the companies that I'm investing in and you decide to blindly follow without verifying the due diligence or internalizing that for yourselves, the first red day, you're going to be freaking out. You're going to be mad at me. You're going to be mad at the process. You're going to be, mad at yourself. And then next thing you know, the next day, it's going to go up 20%. And you're going to be hurt, kicking yourself for selling out on the red day, okay? It's very important you verify all due diligence, come to your own conclusions, talk to a financial advisor, read the disclaimers, okay, before ever investing your capital. I am documenting what I am doing for the longevity of this journey, okay, which is going to be 10, 20, 30 years, okay? We're going to be doing this a long time. Come check it out if you would like to. Link down below in the description of this video. But with that said, let's get into the big news of this weekend and why I think it's time to be all in, figuratively speaking, this market and AI. Now, Fed Mausoleum is taking another flip-flop today. Fed Mausoleum says it's reasonable to expect tariff inflation effects to fade. Fed Mausoleum says requires additional data and will be adjusting rate trajectory until the September meeting. Fed Mausoleum says inflation above target with risk of persistence. Fed Mausoleum says policy rate might need adjustment if risks to job markets escalate. Fed Mausoleum says next jobs report could justify rate cut depending on the results. Rubio and Cho reinforced importance of U.S., Japan, and South Korea ties. And Rubio met with South Korea FM Cho, which is basically the Rubio standing in South Korea. Barclays now seeds a Fed rate cut this September, previously was in December. Trump says we are doing a major tariff investigation on furniture coming into the United States. The CNN Fear and Greed Index to close up this week ended at 61. The previous close on Thursday was 55. Market momentum is greed. Stock price strength is greed. Stock price breadth is neutral. Put and call options is greed. Market volatility is neutral. Safe haven demand is neutral. And junk bond demand is currently in greed. The AI Investor Sentiment Survey also came out on August 20th. And you're coming in with bullish investors at 30.8%. Below the historical average of 37.5%. Neutral investors at 24.4%. The historical average is 31.5%. And bearish investors at 44.8%. The historical average is 31%. So you are definitely fearful still at this current moment. And that was my whole thesis on why I thought Jackson Hole was going to be positive, okay? Like, we were so fearful heading into that even if we got like a neutral Powell, a Powell that didn't change his stance from the last Fed meeting, that would be seen as bullish. Now, if we got a Powell that was kind of neutral but leaned more bullish, which was also a possibility, that would be a really positive outcome. And that's in fact what happened. We got a Powell that said a lot of the same things that he said on the podium a couple weeks ago, but he did throw in there that, he kind of supports cutting rates in September, which was not something that a lot of people expected. In fact, I assigned a 0% probability on Powell being a hawk, okay, on Friday. Like, there was a 0% chance of that, in my opinion, judging off of the data that we've gotten since the last Fed meeting. Wall Street was under the assumption that there was a good chance that Powell was going to be hawkish. There was a mismatch of expectations versus the reality of what we were going to get. That is why I was bullish on markets heading into Friday. And sure as shit, stocks went up aggressively. IWM was up like 4%. NASDAQ up almost 2%. S&P up 1.65% and some change, hitting a new all-time high on the S&P. This was something that was easy to forecast in my view, but I do think Powell's flip in Jackson Hole 2 to 3 years from now is going to be looked at as the decisive moment that changed everything. Kind of like Jackson Hole in 2022 was seen as the decisive flip of Powell getting really bearish that kind of changed everything. I think this Jackson Hole is going to be seen as the opposite of that. This is going to be seen as the moment in which you should have been long this market. Okay? Why? Because the Fed made it clear they don't think that tariff inflation is going to be a longer running issue. Of course, Powell hedges his bets and says it's a possibility that that happens. But essentially, this was Powell saying tariff inflation is likely not going to translate into a longer term inflation issue. And that was a big change, okay, from what we've gotten from Powell, this whole year, essentially. What we're heading into, I just want to be very blunt about this. What we're heading into the end of this year and 2026 is a stronger economy, no inflation, hopefully a consumer that can get better, okay? Big, beautiful bill. There's a lot of very positive capital expenditure, tax policies and that. No tax on tips, no tax on overtime. Again, economy is going to get stronger, likely the consumer as well. We're heading into a bunch of rate cuts that's going to help fuel that, AI capital expenditure, but also help to heighten valuations. But really what it does is rate cuts extends the time horizon. So right now, if Wall Street's focusing on the next 12 months, with a couple more rate cuts, maybe they could start focusing on the next 24 months or 36 months. Start extending their time horizons out. When people extend their time horizons out, instead of buying, let's say, Tesla at next year's earnings, they're going to look at what 2029 earnings could be or 2028 earnings could be and say, hey, we're willing to buy Tesla today based on our estimates for 2028 earnings. You don't really hear that too much these days because there is another alternative. There used to be a saying on Wall Street called Tina, there is no other alternative. And today, there is another alternative. It is bond markets. It is fixed investments. So that's the setup that we're heading into. I think a pretty euphoric market around AI. Now, we should be getting trade deals done and finalized by then. Hopefully, some of the conflicts around the world, like Ukraine, are coming to an end as well. And really, 2026 looks like it's going to be almost a picture perfect year, minus any, changes we get from Trump or, if we do get any surprise bad news from Trump. That, I think, is the risk. Now, I think personally, Trump wants the stock market to do as good as possible. One, because he's financially vested in that, okay, with DJT and Trump coin, some of the other, things that he may own, okay. But he wants rates to come down. And I personally think he wants the title of the best or strongest stock market performance of any president. I think that is secretly what Trump is striving for here, because the stock market helps make most of his decisions. Okay, whether it is to fire Powell or not fire Powell. If stocks reacted well to that, Powell would have been gone by now. Okay, stocks did not react well to that. They sold off, so Powell sharply backed off of that stance. And that goes for a lot of other smaller instances. Okay, if stocks react negatively to something, Trump backs off. So it's like Taco is not really like a between nations kind of thing. It's really between Trump and the markets. Trump doesn't want markets to sell off and crash at this point. That's just, he doesn't want that. And I think Trump realizes the connection between the markets and the economy. Stocks sell off and are down for an extended period of time. That just hurts the economy as well. So I think we're heading into a very strong 2026 and really end of this year. Now, the next 5 or 6 weeks, seasonally speaking, get a little dicey. Especially in September and, around mid-September, things get really dicey. So anything's possible between now and then, and it's really going to depend on the economic data and what transpires between now and then as far as economic data. But from mid-October through November and December, I see a path for a very strong market here. And that's not something that I would be willing to fight, and especially heading into 2026, I think it's going to continue. So let me know your thoughts on this down below in the comment section. Hit that like button and subscribe to the channel if you've not done so already. Have a fantastic rest of your weekend, and I will see you in the next episode. But if you would like to come join the trading community, check out that link down below in the description of this video. Have a great rest of your day, and I will see you in the next one.